Okay, good morning traders and welcome to the Bookmap live trading webinar. Today with Scott Pulcini. We do this every Thursday at 10 a.m. Eastern live trading webinar. Today with Scott Pulcini. We do this every Thursday at 10 a.m. Eastern. And he's going to go through, he will take some live positions. It is in demo paper trading mode. I'll talk more about that. It is for just educational purposes. That's important. And why is that? Because, well, here at Bookmap, we teach how to read order flow. We have an educational course. We have live advanced webinars 3 days a week where we go through live analysis based on that course. Then we have 2 days a week where we have live trading with Jay Trader yesterday, a stocks trader, and today Scott Pulcini, a futures trader. So that's our offering here. We think it's pretty quality, robust education, and it is all free, at least for now. So you guys know who Scott is. He's been trading for quite a while. He has a very unique backstory here. He does offer mentorship and educational services. I'll put this into the chat for you so you can reach out to him if you like. All right, so let's jump in here and go through the risk disclosures. This is important, so know what you're getting involved with here. The general disclosure: all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Live trading is in simulation, demo, paper trading mode, and strictly for educational purposes. Live trading executed in simulation cannot accurately represent realistic trading performance. Risk disclosure: trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. An investor could potentially lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security nor lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. All right, secular, thank you. So we're all good here. You guys can see and hear me. All right, so any of the YouTubers out there, we are also broadcasting this in our Discord channel. So maybe you're interested in joining that. It's something to consider. The chat will continue on about the what Scott's going over or whatever we're covering, and that's the idea of our chat room. All right, Scott, are you in here?
Yep. You hear me?
Hey, there you are.
What's going on?
All right, how are you?
Good.
All right, so let me give you or you can start broadcasting, and then I'll broadcast your screen. Are you able to do that, Scott, or I don't see it yet? You're having issues? There it is. Got it. Okay. All right.
Do you have the
We're all good to
do you have
go.
the ES? Hear me?
Yes, we're all good to go. I see the ES.
Yeah, so I got this new microphone. It's not working out so well right now, so it keeps like turning off on me. So to keep watching to make sure I'm connected. You just see the ES?
Yes, yeah, we see it
Okay.
fine.
All right. Yeah. So this is probably the slowest morning I've seen in a long, long, long time. You can see that. I mean, there's nothing going on. You can see there's.
Do
So
you
I missed the basically only trade of the day. Go ahead. I'm sorry.
do you like? I mean, I know you have your thresholds. On slower days, though, do you kind of lower those thresholds then?
I don't. I get that question all the time in my trade room. If it's close, so say if my iceberg thresholds for ES are 700, if I see like 650 or 670, I'll go to that volume. But I usually have a floor with my threshold, so I will increase it if I continue to see um, the thresholds violated to the upside. You know,
Hmm.
ideally you're going to see in a market maybe 3 to 5 thresholds in a day. If you're, so say if your threshold like in gold here is 150, um, if I start seeing 200, 250, 300, 300, 300, well, I'm not using 150 that day. So I will move it up, but I will not move it down. So
Got you.
very, very rarely, but you can go a little bit below it, but not really. All right, so this is actually the first thing that's fired off since I missed a trade here earlier. There was I started this right around 5 o'clock, and I was a good boy and went and worked out. And then I missed this trade, but you can see this over here quickly on this computer. My other book map. There was a Dumb and Dumber up here. You can see the stop run. This was a really good trade at the time too, because this was an important zone that we'll look at. But you see here there was 480 stops. This is the definition of a Dumb and Dumber. Hold on, I lost my little drawer guy. 1 second here. Not seeing where my. Anyway, there was this and this. I may have to restart this drawer because I can't find the control panel. But you had 500 here, instant rejection. And hold on a second, I got to restart this drawer because I can't find it. Struggling this morning, Bruce, and there's nothing going on.
Yeah, yeah. I mean, some are kind of doldrums. Um, I mean, it's been a nice, a few weeks previously in the move up.
I can't get off this drawer. There you go. That's perfect. I can't find it, and I'm trying to go to the task manager, and I can't even access the task manager. Something going on with my computer here. This is not good. And they switched me. They did the automatic update, and they switched me to this Windows 11 or whatever it is, and now it's like usually
Oh,
if I hit
really?
Control Alt Delete, I can access the task manager. I see the task manager, but I can't get off of this drawer to do anything, and I
Well,
don't see the
click
control
on
panel
the. I
disappear.
can see the drawer in the task in the toolbar there. Task.
Right,
There.
but it does see what I'm saying. It doesn't let me do anything because I'm on
So
the
hit
drawer.
escape. There you go.
Already. So where did you see it?
Yeah, go to the left, left.
Oh,
There it
right
is.
here.
Yeah.
See, but I can't pull. Let me just close it from here.
All right, you can just go to it right there.
I know, but I'm clicking on it and I don't see
Yeah,
it
yeah,
anywhere on the.
yeah. I know. So click on it, and then click on it
Yeah,
up above. Right. Uh, One, two. Yeah, right there. Then it should pop up.
that's what I'm saying. It's not popping up.
Okay, so then right click on it or no,
Oh,
I'm sorry. I know this
this is
tool.
all
This
good.
tool is a good tool. Um, uh,
Yeah,
but what you can do, yeah,
I
you
did.
can get rid of it here.
I'm just gonna end it.
Yeah.
All right, there you go. All right. This is technical stuff 101 here. Hold on, let me restart it here. See, now I'm getting, because I did a download, that's the problem. All right, so this should work now, I'm thinking. All right, there we go. That was easy. All righty. So we just got a signal. Soybeans.
So what were you seeing in gold there?
Yeah, I'll go back there in a second. Soybeans is one of my best products, so I don't want to miss this. So let's check this out real quick, and I'll go back. Um, you see here, there's almost 300 or 262 sell ice here. So my threshold in soybeans is 150. Remember, you want to see where this spike occurred on the SI indicator, and you want to include all the price points, aka bubbles, in that to draw your zone. That's that. I usually use the black for the sell ice. All right, so that's step one for me. Now I want to determine the ATR to see what the current volatility is. And we're at 3.51. You can see it right there in the middle of the box there. So a little over 3.5 points. I want to check my Ludwig levels. Always confusing me. We'll come back to this gold in a second. So this is a perfect example of, when there's nothing going on in these other markets, you want to be watching other markets, at least 3 to 5 other markets where you can move to and not be forcing trades in terrible trade, right? So we're above the yellow lug here. So my rules are, so these are Ludwig levels. I talk about them every webinar. They're incredible for day trading and support and resistance, and also coming up with a thesis on how they react once they form new lugs, etc., etc. So we'll go over that. But right now we're above the yellow lug, so I take my setups aggressively out of here, meaning the minute it gets outside of an ATR, I will take that trade. If I want to go short, then if we're above the yellow lug, then I wait for an ATR move, retest, and a failure. So right now I will take this setup aggressively. Let's check out the see where we're at here. Doesn't the zone actually? I think I need to update here. So this zone was relevant that we're in right now, but I could possibly delete this. See here, we had gap down day here, gap down day here, and then kind of a gap up there. So just leave it for now. But once you start trading up and through zones, then you can delete them and then move on to the most recent stuff. I just haven't drawn these most recent zones, but it still looks like a relevant area because this was a balance. Tried to break down. We're trying to get through the high volume node of this balance right now. So if they can get through here, get through this zone, then we should get it should get a nice rip up, because you can see above this current structure, there's really nothing. It was just a straight gap down directional conviction move. So if this thing could get rolling, it could get a nice move higher. So that is looking close to bullish right now. So that's the way I trade, right? So I come up with a thesis, and I look for trades in the direction of my thesis. I will take counter trend trades, but when you come up with your thesis and you get your real-time volume setups, which are the most important, in the same direction, then those are the best trades, and then you can actually expect a larger move in your trades. I am a day trader, so I will trade counter trend, but you got to be quick to. If a market is extremely bullish, like we'll talk about these equities here in a second, you got to be quick to be getting out on counter trend trades. So as of right now, it's a pretty tight zone too. ATR is 3.5. So right now I will get in this trade long aggressively. So 3.5 points. So I go a little outside the ATR. So we'll go 4 points above here. So we're at top of the zones right around 1398 quarter. We'll go 2 quarter for my entry. That's the aggressive entry, right? So if I were to go short, say this just breaks, say the sell ice wins, then I wait for the full ATR, a retest, and then a failure, then I'll go short this. So we'll see how this pans out. We did have, actually what I can do here, this is a lot of sell ice. It's just not concentrated, right? So this was the most concentrated 250, but you did have 150 here. That's threshold. You had another 114 and another 92. So somebody is selling this thing. So what I'm going to do is I'm going to just change this zone, and I'm going to incorporate all of this sell ice. I just didn't see that when I first looked at it because I was looking at this main spike. You can see this has been coming in. It's basically here, and so you can see now I'm incorporating all this sell ice, right? So it basically came down to here, and then all these spikes came all the way up to here. So I'm actually going to change my entry for this too. So this is an important area, right? So the whole concept behind this is you're looking for areas, volume events that traders are caught once it moves out of here, right? So there's obviously some big time activity going on in here. There's tons of buyers in here that keep running into hidden sell orders in the order book. Remember, icebergs are hidden orders until a certain percentage of them are traded into. So, you know, these buyers are trying to push this up and they keep running into sell ice. So whatever way this breaks, you know, paper, big money, it's obviously the big money, so they can move the market around, but they're wrong. I would say they're right more often than wrong, but when they are wrong, that's actually one of my setups called broken ice. So, you know, you would expect this to do this, but for some reason, if this is able to get above here, then that's broken ice, and that is, you know, that's also a great signal to go the other way. So I'm going to just change this entry because we've increased the zone, so I'm going to go 4 points above here, which puts me at 350. I'm going 4 points above the top of this zone. All right, so we'll see what happens there. Now, again, if we break down, retest fail, I'll go short. And the reason I'm waiting for my conservative entry is because we're above the yellow Ludwig level, aka lug. So, see what happens there. So back to gold. So this morning there was that Dumb and Dumber up there, and this was a very important zone. It continues to be an important zone. You can see here, this was an area where this broke down from that led to this entire move here. So came back up, same thing, directional conviction, came up again, failed again. This was this morning. That was a good trade, especially when you get the volume setups in important zones. That's important. So now what's going on here, this looks like it's about to rip, right? We can get through this zone. So current factors are, yes, we're back into the zone. If I get a short setup, yes, I'll still play it. This thing needs to prove we can get through here. But you see here, that is a major buying tail, one of the four areas of charting, important areas of charting, right? So a tail is just instant rejection. So they tried to sell this off and just instantly rejected. Now they're trying to get through here. So if we can get through this zone, you know, it's been support, or I'm sorry, resistance, resistance, resistance. Now if we can get through it, then it'll be support. So this is actually a very important zone. There hasn't been a setup right now. I missed the one earlier because again I went to go work out, but we're right back up here. I don't have the zone drawn on this, but that was a stop run up here, so we'll see how this reacts. So what you could do as well, you know, nothing else has been. Let's see if these are thresholds. Yeah, they're actually, you had some thresholds down here that I missed. I always miss the perfect trades. You can see here we were trading this just for educational purposes. See the stop run, and then you incorporate the prices there. I think that's right. Never got, so you had back-to-back Dumb and Dumbers up here. So this other zone, let's just see where it is so I can draw it. It was from 18.5.7. Just looking at my other computer, I don't need to bring that over. Just, that was the top of that stop run was here. And then it was all the way down to 39. That was that first stop run. So I always talk about deferring to the most recent setup, right? But you can play prior setups, even if something else has occurred, like kind of this stuff down here. This is another one. I'm not going to draw that because we already got through it. But if the setup led to directional conviction out of there, like just literally a straight move like this one did, you can play that for a retest failure. So because this zone's so important, I will take this trade. I know that so we talk about this in my room all the time, right? So when you're taking trades, you very rarely are going to have everything on one side of the trade, right? So you real-time scale, right? So you come up and you say, okay, the bearish factors are, this is an important resistance level. It's led to directional conviction a couple times. We haven't looked at the lugs yet, but we'll In the bearish side, those are the two factors. In the bullish side, currently, I just showed you that big buying tail. So, you want to, when you're putting on trades, you want to determine the factors more in favor of one way or another. And then obviously use your real-time setups. So see where we are in the lugs to get a clearer picture here. So we're above yellow lug. So what we talk about in the lugs as well all the time is when you draw new lugs, one of the things we talk about this. I talk about this with Pamela in the Ludwig webinar I did with her last year. You guys can. It's been in this room, posted in this room continuously, so you can watch that. But one of the things that obviously you use these things as support and resistance. But another thing you can do is when the way the market reacts to the lugs once the new ones are built, right? So when you build new lugs, prior directional yellow or prior red should hold, and it should head up to the next red lug. If these get violated, then you expect blue, right? So you're expecting blue. Now it didn't get to the blue. Now it got back above the yellow, so now you expect red again, right? So this is a little more confusing, but usually when you get this set up, you will go down and tag blue. This is telling you something that it didn't tag blue, and it was able to get back above directional yellow, and we saw that that buying tail as well. So this is so I'm just coming up with different factors in my mind. This is exactly how I trade. Like, okay, do I want to trade this prior zone to the short side based on, are there enough factors short versus long to take this trade off of a prior zone? Like if it was a brand new setup, then I would just basically take the trade on my normal rules. But this is kind of a different situation where you don't usually see the directional conviction straight out of zones where it comes back and retests and you have to decide, hey, am I going to trade it again? So in my mind, there's enough, it's about 50-50. So I'm not going to take this trade off of this prior zone, right? I just went through the reasons. That's my decision. And, if this ends up breaking, it ends up breaking, and there will be a new setup, and then I'll go short. But there's just enough going for this on the long side where I don't want to mess with a prior zone. And if this was a newer setup, so say this just happened right now, and we were below the red lug and so on and so forth, or even if it's a new setup that just fired off right here, and we got the ATR, we got the retest, then I would short it. That's enough because of the newest stuff. But what I'm saying is this was a prior zone. Was there enough on the bearish side to short it on this retest? And for me, it's no. So I'll just let this play out. Pretty long explanation for pretty elementary stuff there. All right. So absolutely nothing going on in equities. Let's go over the structure stuff. So this is a really important zone that this is just sitting in right now. So this balance area led to this entire down move, right? That led to all this down here. So this led to this down move, and then what we did is just built a huge balance area here, a multi-week balance area here, and then broke out of that, right? So I was watching closely when this came back. Again, one of the four, this is the second of the four important areas of charting, are the high volume nodes of balance areas, right? High volume node is the balance area. You can call it, there's other names for them. I'm blanking out for the other names for them, but I call them balance areas. So the middle of the balance area is usually where the most trade occurred, back and forth, right? So you really want to watch how the market responds there. And you can see we did finally get through there, but it's been kind of struggling building balance basically right in that area, right? So yesterday we finally broke out of this. So the last stand for me, and the way I'm looking at this, is this zone here. And you can see everything that happened in this zone and why it's so important and why we're probably just sitting here for now. I still think we're going to get through it to the upside. I just do there. Natural gas numbers coming up here in 5 minutes. I think swim is not working well either today. Anyway, so we had directional conviction, gap down, directional conviction, right? And this is the top of balance area. So this is an important zone where this could fail. But the problem is where these zones are the best is where they're easy to judge is when you have straight moves into them, right? And then a lot of times you can play the reversal. This is a different story now back into the zone because now we have built balance directly below it. So this is a different situation than something like that, right? Because now you've built balance. So all balance is are traders placing bets, longer term traders, shorter term traders, so on and so forth, placing bets in here. So right now the shorts are not feeling very comfortable, right? And this is very close to a major puke out of this zone. So yes, this zone's important, but it's not as important now because the most current data is this balance area, and we're above that balance area. Now we're building balance on top of balance. So yes, this zone's important. Yes, this could fail, but it's not like a slam dunk short is what I'm saying. So it's kind of a tricky situation here. So if we break out of this balance and we get through this zone, then these areas are your next stops up. But you can see this next one right around 42.60-ish. This is a really important zone too. So if we do rip, you really want to be watching this zone. This was directional conviction, gap, directional conviction, right? So that's an area to watch if we rip. But this could, when markets break out of balance areas, especially these markets, they do head fakes all the time, right? So this is very obvious to anyone looking at a chart that knows anything about charting, right? Hey, we're breaking out. Well, so many traders will play that initial breakout, and then it'll do one of these, and it could it could pull back all the way to the top of a balance area and then go. It could even pull back all the way to the high volume node of the balance area and go. And this 4100 is an important area in spot gamma as well that we'll talk about. But the point is, this can still remain bullish on this recent setup up to this high volume node. Now, if we do this and we break through this high volume node, then I'll be looking short, and you can see there's really nothing here structure-wise. Then we can do one of these. So you look at this stuff every morning, you come up with scenarios, and you say, okay, well, I know where we're at. I know what should hold, if this is going to remain bullish. But the point is, like, this could have a sell-off here short term, and it's still intermediate term bullish. Right? So regardless, if it's bullish right now, short term, balance above balance, I'm expecting that to happen. But again, that's my thesis. Then I let the real-time volume tell me. The problem today is there hasn't been a single real-time volume event for me to trade off of, right? So obviously I look for my SI indicator info, and then the other thing that you want to keep a very close eye on is your relative volume. And so you can see here, there is nothing big money wise. This is just algo fest back and forth, right? Look at this relative volume here. We can barely get to normal for these. So this is relative volume on the Sierra chart. Again, Thinkorswim has a different version. I don't know why these other charting platforms don't have different versions, but Thinkorswim is just showing you the prior 60 bars relative volume, which I don't think is effective as knowing. So this one's set for the last 30 days. So I know exactly at the 7 or 925 time period, the last 30 days, this is about 50% of normal volume. That is really important information to know, right? So when you're seeing this kind of volume, you want to be careful trying to play breakouts, so on and so forth, because it's just algoville. There's no big money in here. And when there's no big money playing, that's when the algos thrive, right? Big money is the algos' worst nightmare because it disrupts their game. Algos are 85+% of the market though, right? So most of the time you're going to get this. And this is why most traders get whipsawed to death, because most of the time the big money's not playing. Right? So right now, this is horrible. This isn't bad. This is normal. And you did have a spike. This is NASDAQ. So this had a little more activity here. Russell's not bad. Dow's not bad. ES looks really bad. So just want to keep an eye on that. So if you're thinking, so for instance, we get to the top of that zone and you think, okay, here comes the breakout. Well, if the relative volume is terrible, it's very unlikely to break out. It's much more likely. So say we get right here and you're like, yeah, this is it. Well, if there's no relative volume and no big money pushing it, anyone can look at this and say this is an important area. You got all these guys fading the area, and these algos know the same thing, right? So you're probably going to get a whipsaw back until the big money actually comes in and starts to push it out of here. right? So the point is, be very careful if you're going to play a break of this zone if there's no relative volume, because it'll probably snap back on you. So you just come up with all these scenarios, and then you wait to see what's going on, the real-time volume, right? So this is my tick strike. I keep an eye on that. You want to know what, so this is just an algorithm that's telling you the speed of the orders and the size of the orders coming in the order book. I have all the, obviously, the highest weighted stocks that drive the indices that drive the futures. So these are really important as well. It gets very annoying sometimes. I was complaining about it nonstop yesterday in my webinar for my room. Because it hurts to watch your P&L rip against you, and then you get to hear it as well. Oh, by the way, this was an overnight trade that I had on that I got stopped out on, but see it on here. But I've done nothing in here today. So any questions on any of that, Bruce? I can take a breath.
Yes. So let's see. Question from Jay Scott about using CVD. If you, I know, I don't see it in the chart. Just wanted to mention it here. That's his question.
I watch it. I don't watch it on Bookmap. I try to keep as little. So that's the natural gas number, but I will gladly trade this puppy. This is why you want to be watching other markets. There's nothing going on. This market we talk about almost every webinar, because I do the Thursday webinars. It's always the natural gas number, but you can see this buy ice coming here. So I'll trade this. I'll come back to the cumulative volume question in a second, but I try to keep as little on these charts as possible. Like, for instance, Ludwig levels, she's beta testing them. You know, if you come to my room, you can beta test those for your Bookmap. You can beta test them through her. I don't even have those on here because it's just too much for my brain. I don't want to see 45 things on my chart. So I watch Ludwig levels on the Sierra chart. I watch relative volume on the Sierra chart. And I watch cumulative volume, CVD, right? Cumulative delta. So we'll go over that here in a second. I just want to make sure I get this on properly. So my threshold for natural gas is 150. So you can see, obviously, there was 200 here, and there's another 150 here. I just got to, so you see this zone is not drawn properly because I didn't incorporate all the bubbles till this spike stopped, and that came all the way down here. So this is, as usual, a pretty large zone, which happens all the time after numbers, right? And especially in here. So change this color, make it, I try to use the colors for the setup so I know exactly what it was. This was buy ice, so we'll make it blue. Right. So that's step one. So you can see this zone was literally a 100 tick zone, right? So that's a lot of risk on your trade. So it doesn't mean you can't trade it. You just got to size down. You can trade the, they don't really have a micro product, but it's a product that's a quarter of the value. I think it's QG. So if you don't want to be risking $1,000 on a one lot, which you would be if you're trading a 100 tick zone, then you can trade the QG and only be risking 250, right? All right, so ATR in here is 68. We talk about this too, right? So when you get a spike, even though not too far from what it was before the number, so many times when you see, you'll see the ATR like down here, like 40, 45, and then all of a sudden the number comes out and you see a spike. Well, you don't need to use that spike number or spike value on a one-time event. You can either go back to what it was before the number, or you can take 20% of an hourly ATR. It's actually showing you daily. Hold on. So you see 240. 240 is the ATR, so that's actually still 100. Was that 24? It's 48 ticks, right? So 20% of 240 is 48. So that is right in line with about what it was before the numbers. So you can either look at what it was before the spike or use the hourly for your ATR. Right? So I'm waiting to see what we do out of here. So that's for my risk purposes, but I still want to see a full ATR out of this, the current ATR out of this, to determine what I'm going to do with my trade here. So stuck in the middle of this, so we'll come back to this. It looks like equities are starting to actually sell off a little bit. Gold is just hanging around here. I elected not to short that based on what we talked about. Let's look at this and I'll talk about the CVD. This is selling off, but there's just nothing happening volume-wise. So we're actually at an important level here in the Ludwig levels, and we're going to have some confluence here as well. We'll look at this in a second. So you see we're at the blue lugs. So these blue lugs are really, I mean, the major lugs are very important support and resistance. So we're here, you're at extreme standard deviation from VWAP, and we're really close to the top of a market profile composite value area. So when you get confluence, those are the best trades. There we go, right on. This is exactly what you want to see, right? You want to see volume event in important areas. So you should know your important areas pre-market, and then when you get your volume event, you're ready to go, right? So we just talked about where we're at on the chart as well. So let's see this sell ice. Finally, a setup. There you go. Let's make sure that's right. Yeah. All right. So that's step one. Step two, ATR is 6.3. So I take trades off of the red and blue lug aggressively. So like I just said, if we're below the yellow lug, I wait for ATR. So because we're below it, for me to go, so say here's the yellow lug, not yellow. We had a setup here, wasn't it? And blue lugs down here. Well, for me to go long, I would need to see ATR retest failure, and then I would go long. The exception I make is if we're at the blue lug, which is in very, very important support, I will take setup aggressively out of here, long that is. To the short side, until we build new lugs, I'm just going to wait, because I do not fade markets into the lugs only unless the relative volume is extremely elevated, and you can see this relative volume is not extremely elevated. Let's see, this bar actually was about 1.5 times, so it's not terrible, but it's not great. All right, so again, ATR is 6.3, so I will enter this trade aggressively just outside the ATR, which is 7. I'm going to go 7 points outside here, so 46.50. Now what I'll do though, I will short this. If we move down here more than an ATR, it's going to draw new lugs, right? And then I'll play the full ATR, the retest, the failure. So I'm very hesitant on the short side though, based on what we just talked about. Right? This is an important area, chart wise, market profile wise. All we're really doing here is coming back to the top of this balance area. And what did we just talk about? Many times when markets break out, they do this juke move, pull out all the longs, and then end up going. Right. So this is still not bearish by any means. Right? So, and this was an important zone. It was resistance. So this was a directional conviction. We blew through it yesterday. So now what was resistance is now support. So this is, and we know that's there. We know we're at a lug. We know we're at that market profile composite high. I am not sold on being short here yet. And let's see what happens if we draw some new lugs, but you can see this is coming right here. So back to the CVD stuff. What was the question, Bruce? Did he ask if I use it?
Yeah, he was asking if you use it, and also relative volume. There's a question about that, but I know you don't look at either of these, but these are the questions.
Oh, I look at both of them. I just don't look at them on. You don't even have a relative volume indicator on Bookmap, do you?
No, no, we don't.
Yeah, I did. I was just talking about relative volume. I use it all the time, right? I want to know what the,
Well,
what.
okay, yeah, never mind. I was thinking of something else as the relative volume, but never mind.
Okay. Yeah. So the CVD I use on here, right? So right now it's not really telling you anything. You got to be very careful using it too. You want to pay attention to divergence. So for example, yesterday we were watching Nasdaq. I shorted ES at the close. That was that position I left some on and got stopped out overnight. But I did catch a winner in it. But Nasdaq was showing a nice divergence in the CVD. That was right here. So you can see here. I pay attention to this, but I only really pay attention to in important areas because you can get majorly burned just playing divergences, right? So for instance, we came up here. There were 3,000. Got to be careful. 3,000 aggressive buyers versus sellers, right? You got a lot of people say there were 3,000 more buyers than sellers. Well, that's not correct. There's always a seller for the buyer, right? It's just at different prices. What this is telling you who the aggressor was. We talk about this like every webinar, right? So that just means there were 300 more taking of offers than hitting of bids, or 3,000 more. Right? So that net, right? So that's important information. Then you make a higher high. You can see it starts to dissipate a little bit, and then you make another higher high, and it's even lower. So now you're talking about a thousand difference, right? That's where you want to pay attention. This is today, so don't pay attention to that, right? But the point is, you got to be very careful where you're using this because, okay, so if you see the first divergence, which was right here, right? So if you short right there, well, you take a loss, or you're taking 50, 60 point move in your face. So it's like, yeah, there's a divergence, but when do you use it? And when I first learned this, the first couple times I saw it, it worked perfectly. And then I started seeing divergences and like just shorting automatically because there was a divergence, and I would get smoked. So make sure it's that important area that you're contemplating divergence. This is just, remember we talked about the scale. So if you're looking to get short up here, you're like, okay, there's a red lug, and there's a setup, so on and so forth. And okay, this is just another factor on the bearish side. We'll put bearish over here actually on the right, that you say, okay, there's another thing in my favor where I think this thing can sell off, and it ended up selling off into the close, which we talked about yesterday in my room. But we'll keep an eye. You definitely want to keep an eye on CBD, but it's not a red light, green light thing. Many times, unless it's at an important level, right? So if we come up and we're at a lug level and I get a divergence, then yeah, that's very good information. But it's just another weight on the scale when you're deciding what to do. And we've seen this a couple times in the last few days. Like Russell, I think it was 2 days ago, had the same type of look, and it also sold off as well. Let's see here. I think it was right here. This is another good example, right? Where, yeah, there you go, plus 1,200, move to higher high. You can see they keep hitting it. At what point do you say, okay, I'm in because of the divergence, right? If you did the first divergence, you get killed. And then you get to a lug and you have the divergence. Now you're talking. 151 contract. All right, now we're starting to. We haven't gone over crude, but crude's in some serious trouble. I guess that's good for our gas, but this thing is. We caught the short in this yesterday, and I think we'll look at the bigger picture, like big picture. This thing's in trouble. All right, so you got 200 stop run here, sell stops. You can see I drew that initially on the iceberg on chart, but you can see the stop run. I mean the stop run on chart, but you can see it continue. So I've got to incorporate these price points in here. So I have to change the zone. I just want to see what's going on here because I forgot to put my orders in my other accounts. Hold on here. That was at 46 quarter. right, that's that. All right, so let's take a look at crude. So this is, you know, I already know this is bearish. We'll talk about the bigger picture stuff, but day trading wise with the lugs, what happened? It came down, built new lugs. If this is going to continue lower, it should hold yellow, directional yellow, last resort blue. So as soon as it gets to there, you're thinking red. Well, guess what? It didn't tag red, and now we're back below. So now I'm thinking blue, right? So you just come up with a thesis based on these as well. So this had every reason to come up here and tag red. It didn't. Now we're back below the directional, which it should have done the first time. I already know this is an extremely bearish market. So, and on top of it, I take my trades aggressively below the yellow lug. So I will short this aggressively. So the ATR is a sweet 47.7 points. So I'm going to go short a little outside of an ATR if this can break below here. So obviously a lot of risk here, so I can only trade 2. We'll look at the risk sheet here in a second to make sure that's correct. So I'm going to go like a little outside 50 ticks. There's that 48. So I'm going to go 52 ticks below here for my entry. Down here until 87.80. So I think this is a good trade here if I get filled. I could trade it to the upside as well. I don't really want to. And we'll go over this here. This thing just blew through a very, an important zone that I had marked from a long time ago. And it was a recent important zone. Talked about this yesterday. I was actually short and I got out into this zone because it was important, and we did stall here, and then this morning it continued through it. That's important too. So if this does a juke move, which crude is about 90% is going to, the important support is now resistance, right? But this doesn't mean it has to do that. I'm just saying if we do pop back up, this is a really important zone that you can short based on everything we're going to talk about. So this zone was huge gap that led to this monster directional conviction. There was some other stuff from back here and from over here. All right, I'm filling on ES. I'll come back to this in a second. Let's get our stop in. Hopefully it's not to the tick. I have not been, the last 2 days have been not good in the equities. So we'll go over the P&L stuff in a little bit, but you got stopped by ES 940 per contract. Right, so now this is perfect. Icebergs sell NQ 151 contracts. Because I can trail my stop now based on this new setup or add, right? So you just see almost 1,000 lot stop run. All right, so we'll draw this quickly. So I'll show you where I was going to put my stop, and then now where I can move my stop because of the new volume event, right? So for this new event, though, I'm going to wait for ATR retest because we're still below the yellow lug. We'll go over that here in a second. But my original stop was going to be 7 points below the bottom of the zone. So I was going to stop out here at 41.30, right? Now there is a new event. Now I can move my stop. So you see, I'm not moving my stop because I'm watching my P&L and I don't want to lose back money like 95% of all traders do. I'm moving my stop based on a new market event because that's what the market cares about. The market doesn't care about your P&L, right? So I'm going now 7 points below here, 46.50 puts me at 39.50. So I'm able to save myself 9.5 points of risk here. So, but here's the issue. I do not like stopping out in the middle of zones, right? So I will go a couple more points and put it just below that volume event, that last volume event. I don't know why this isn't. There we go. Do you see what I did there? So my normal stop would be 7 points below here, which put me at 39.50.
Stops LCL 153 contracts.
But I missed a trade there. But I don't stop out in the middle of zones. I try my best not to. So I'm going to put it just below the extra 2 points. Right. right, so my stop's at 36.75. Watch that. Let's see. And I just cut my risk in half based on the new volume event. You don't always get the new volume event, right? And I've added a new rule too. We'll go over as far as, trades going my way and then they don't hit my intended target and they start coming back. Well, I've had a couple whoppers where I've let like like last week I had a huge winner in crude and I let it, and there were no subs. So the way I get out, the two major areas I get out, well, there's more than two, but the major areas I get out, we'll go over this because I'm going to show you guys some trading in the zone stuff. I get out at major levels, Ludwig levels. So for instance, I was long last week in crude and I did one of these and it actually was really bad on my part. It was really close. I got greedy for like 15 ticks and got smoked. So anyway, I get out either a major Ludwig level or a volume event going the other way. Well, it did this and there was no volume event and came all the way back and I gave back a ton of profit just because I didn't get a signal or one of my areas. So I've come up with a new rule where from the high of that move, in my favor, if it comes back just outside 2 ATR, 5-minute ATRs, then I'll exit the position because I can't give back, waiting for another setup because like I said, paper's in there, 15-20% of the time. Other than that, you're going to get these algos whipsawing it back and forth. I can't let a market come all the way back on me. So I've added that factor in. And then yesterday, of course, forgot to do it on NASDAQ. That cost me too. I've been having not very good trading lately, last couple days. But all right, so this is still alive, obviously. So I will add to this trade. The reason I'm not going to add aggressively, so I got in the first long aggressively because we were bouncing off the blue lug. Right? We just talked about how important these lugs are, right? I also knew we were close to this market profile composite, so on and so forth. But we are still below the yellow lug, and my rules are I need to see ATR retest failure to go long. So I will add to this as a brand new trade, right? I already trailed my first stop based on this zone, but if I see 6.5 points, let's just make sure that's what the ATR is. Yeah, it's 6.56. So I need to see 6, and I round up. So I need to see 6 3/4 points out of here. Retest, fail, then I'll go long, and I'll add to that trade. In the meantime, my stop's in. Actually, why do I have 7 in here? Hold on a second. I don't know why this is not working for me lately. Any ideas, Bruce? Like, I don't know
What are
why
you trying
I
to
click
do,
on it
Scott?
and nothing happens. I was just trying to change the quantity. I'm left clicking on it and like it won't. Nothing comes up. I hit it a couple times.
IRT. 151
yeah, you should be able to edit it just by maybe click on the bid side or the ask side.
Well, that would just put it in another order. I'm just trying. It works eventually, but I've got to like click it a bunch of times. It's fine. It doesn't matter.
Here,
I
let
don't
me
wanna
let
get
me
into
let me
technical
let
stuff
me
right
take a look here, and I'll get back to you.
Good. All right, so we just heard an event in Russell. Let's see what happened in here. I'm just so thrilled. There's some volume events. Last 3 days have been horrible. All right, so now you got buy ice coming in here as well. That's threshold. Threshold in Russell is 150. That's 210. Corporate out prices.
Sell MT. 158 contracts.
My buddy natural gas. I forgot about that one. Let's see what's going on here. All right, so we're moving out of that zone. Now you have a new volume event, and that's huge too. That's 400. All right, we'll come back to that. That's gonna get interesting in natural gas. That thing can move 500 ticks in a heartbeat. All right, so what's my process? Draw the zone, check the ATR. ATR's just move the decimals, 36.6, so 37 ticks is your ATR. Let's see where we're at on the lugs. We are above the L. Oh, sorry, I forgot I scrolled back here to show you guys the CBD. All right, so we're just bouncing around the yellow lug here. So either way I would take this trade, I need to see ATR retest failure. So I'm meaning I'm not going to be aggressive out of here either way out of this zone. Bigger picture stuff. You can see this is struggling in the same type of zone that we saw in the ES. This area led to this directional conviction that led to this entire down. So that's what's happening here. Again, this is a different situation where you built a ton of balance right below it, so it's not as strong as if. So say we did one of these, say we're over here, and we just did a straight move in it. That is like a golden, almost 100% fade. This is a different situation because now you got all these loaded up traders. We just talked about this. That if this moves a little higher, they will be puking. It is going to rip right through that zone. But for the meantime, this is holding. But doesn't mean it's still, you could just eliminate one side of trading based on structure, where you say, this is balance. I'm not taking any short. I know we're in the zone. I'm not taking any shorts. If we can get back down through this high volume node below here, then you can take shorts. Other than that, I just look for long trades. That's the smart thing to do. And if you watch multiple markets, you can sit there and be that patient and wait for those types of trades, right? But for the sake of the webinar, and I'll trade these either way, and I know this zone could fail too, back down the downside. I'm not thinking it's going to be a huge sell-off, but I will trade this either way depending on how we break from this volume event. Let's draw this real quick. Actually, let's go back to crude because I'm pretty sure I just missed a trade in here. That's good. Yeah, I forgot I even put this in. So we have a new volume event here too. You heard that fire off. This is 150. What I'm going to do is I'm just going to make this, I'm going to just make this zone bigger. It's barely threshold, but I want to incorporate that. I'll leave my entry the same. I should basically move it down, but what I've been doing lately all the time is, so say you get a setup here, right? And you want to be short and you got your order waiting to go, and then a new setup comes in. Well, are you going to then trail your entry down again? I mean, you could miss the entire move, right? So I'll still enter this in the same spot. But, say with this setup, what I can do is, even though I'm not drawing it, I can then go an ATR above the top of this most recent setup versus the top of that setup, right? So I'm not going to trail my stop to get in because you can miss the entire move. The volume events keep happening as you're moving down. Well, you're going to miss the whole move, right? So what I do is I will enter on the original volume event, but I'll trail my stop on the most recent volume event. So hopefully that makes sense. So we'll leave that where it's at. Get this order in. I forgot to put this in my other accounts. All right, so that's locked and loaded. This is natural gas. Let's definitely draw this sell stop or sell ice area. This is the major event here. You can see this is all one house too. That's the what's great about this SI on chart. You can see if it's one entity or not. Not that that makes a huge difference a lot of times, but it's still good to know, right? Let me make sure I get all these prices. I can't really see this on here. To see the bubbles in this is the most algo ridden market out there, right? Again, if you pull up a market and it looks like a Christmas tree, it just means it's all algos. But like I say every week, that's a good thing for the volume events because algos hate big money. So when the big money comes in, it disrupts their game, right? So that's why these work so well in this market is because it's the most. I mean, look at this thing. Look, you think there's some algos in here? That's good. All right, so what do we see? ATR was in here 50 something, or it's up to 71. It doesn't really come down after the. So 71 hasn't really come down since the number. Did we get 71 ticks above here is the question first and foremost. This was at pretty much 01. We only got about 50 ticks, so we don't know what this setup is. We don't know if this is a broken ice setup where the sell ice gets smushed, or it's a Titanic setup where the market runs into the sell ice and then fails. So we don't know what this is until it can get an ATR above or an ATR below. So we will wait on this. But I can tell you, this area, this buy ice combined with this sell ice, you're going to get a monster move out of this area. And that's the whole point. You wait for these areas where you know there's big time trap traders and you're not just playing with algos, and then you can expect the bigger moves. That's the whole theory behind that. All right, top of this zone, so we're not even close to an ATR out of here yet. All right, so let's see where we're at here to maybe cover. Now we're at some spot gamma levels, so I may cover, and we're at VWAP. So I don't usually get out of VWAP, but unless it's confluent with something. So first of all, this is the top of this prior market profile composite. Just get out of a couple here before I even cost myself. Two there. All right, so spot gamma alone, anyone that uses these knows these are very powerful, right? All these are. I use them in the simplest sense. He goes down the rabbit hole like I've never seen, and it's very, very credible information. But I don't need to know. I use this analogy every webinar too. You know, if I walk in a room and I need light, I don't need to dissect the light bulb to know why the light works. I just need to turn the light on, right? So same with this stuff. All I need to know is they are incredible support and resistance, because options players are major players in the market. And at these areas, they need to hedge their options positions, right? So just use these just like you would use support and resistance. If you come at them from below, they're resistance. If you come at them from above, they're support. That's how I use them, and I use them for targets, so on and so forth. But you can get in the inner workings of them. Like it's pretty incredible how that guy is one smart cat. I can tell you that. But it's like my trading is just it's very simplistic, and I've always said the simpler you make your trading, the better you're going to do, because the more you try to analyze things and understand. Like I get all the time, even in my room. What do you think that buy ice was doing there? Do you think they were getting out of positions? Do you think they were entering position? Or were they hedging options? It doesn't. First of all, you're never going to know ever, unless you're God Almighty, right? And then it doesn't matter, right? It matters. The area is what matters. It doesn't matter why they're doing it. You're never going to know it. So just understand the area and how the market reacts to that area. That is what is important. Don't waste your time trying to understand. I mean, even in my room, like guys that come in there new, they're like, well, there was some buy ice down here, and then I saw, now there's some sell ice, so that's got to be this buy ice getting out of there. It doesn't have to be anything, and you're never going to know. So why waste your mental energy trying to figure it out? All right, so actually, did we get the ATR above here? No, we did not get the full ATR. So I would have added on this retest of the zone, but this did not get, ATR is currently 6.38. So we did not get 6.5 points out of here, or I would have, if this did ATR retest, I would have added to this trade. But that was I got out of 2 there, right? So that if this does pull back and stop me out, then so be it, but I'm on it 2. So this is what I'm talking about, Bruce. I'm clicking on this thing, clicking on it there, then it finally goes.
Yeah, just I was looking at it too. Just I think you need to widen out that column a little bit. It would make it easier.
Okay.
Yeah, just try that. Now click on it. Left click on it.
Nope.
It must be Windows 11.
Yeah, I'll just blame Windows 11 for everything.
I'm not sure, Scott. I mean, that is how you do it. Yeah, I'll tell the team about that.
Okay. So
you can still do it on chart probably. If you not you have to go back up to the trade control panel in the top left and click on both. Not DOM. See, it says DOM.
No, I don't want to do that because I do so much dragging. I've learned the hard way on that one.
Okay, no problem.
We'll leave that.
Also, Scott, there is a new DOM that you're aware of. So if
we need to go over that. Remember, I went on vacation.
Yeah. There's a lot of
Let's
stuff.
Let's go over that and the new heat map thing, and let's do that sometime this week. So the next webinar, I can watch it for a week, and I can go over it.
Sounds good.
Seeing.
Okay.
All right. So this still has not gotten ATR above here. ATR. This is Russell. It's 35. We only got to about 80. So that was not an ATR yet. So we're waiting for that. Waiting to see what happens here. Natural gas. Not filled on crude. Still bouncing around that zone.
But try one more thing, Scott, if you could. If you zoom into one where you have in a position, and then yeah, zoom in a little bit closer. Yeah, expand it out, and then left click on it.
How do I expand this out?
Yeah, and then
This?
and then yeah, left click on it now.
No, sir.
Okay, left click and hold.
No, sir.
No, okay, all right.
Then it does it right there. I guess you got to
See,
go to the very bottom of it.
you have to get it. Like what it
Oh,
is.
that's what it is.
It's
so
not.
Look, if
it's
I
not,
go to the very bottom
yeah,
of it,
yeah, exactly.
let me do it.
So
Okay.
Once you see the red X in there, you know you've kind of
Right.
got it.
This is something I didn't notice before, probably because I didn't have it expanded. But yeah, look. So if I'm in the middle, nothing happens. But if I go to the very edge of it,
Yeah.
then it shows.
Well, yeah, you'll have to play around with it. You'll see the X, that red X allows you to cancel it. And then at the same moment, it'll allow
Right.
you to edit it.
Change quantity.
Yeah.
Right. Got it. All right. Soybeans just sitting here. This thing looks like it's gonna rip. Let me get my other accounts going here. Forgot to put this into. So what was the relative volume question, Bruce? Before?
No, you answered that. That was I just wasn't really quite paying attention too well though. So my problem there.
Okay.
There are some other questions though here. Whenever you have a moment.
Yeah, go ahead because I got to set up these other accounts anyway. For
Okay. Do you look at ultra bonds? And if you don't,
I do not. There's a couple guys in my room that are watching them. I may start watching them,
Okay.
especially if I got traders that are using them. Currently I do not. No.
Okay, and then that looks like Troy is actually spamming us. And
So I'm filled here. You guys heard that. So now let's check the ATR. This is soybeans again. It's either buying wheat and corn. We just need some soybeans. There you go. There's your soybeans. Again, this is Tick Strike, guys. Everything I use, go to my website. You can get discounts to everything that I use. Click on the banners on my website. So this is one of them, Tick Strike. Very good to know. You know, say it's like right now, I would have no idea besides that fill. There hasn't been a setup in here, so I had no idea that these markets are ripping. This is why I actually started using this in the first place about 10 years ago, right? So it's really good. Like I said, when you got a position going against you and you get to watch it and listen to it, it's not so fun, but it's still very important to have, right? And then now he has this thing where you can connect them, so we'll keep it on that. Anyway, 3.36, you see the ATR there in the middle. So I'm going to go just outside that. I'm going to go a couple ticks outside that. So 375. So this was at 94.50. So 90.50. 90.75 is my stop on this. So one of my main targets now will be red lug. You got baby lug that I'll watch closely. These are just like, we call them baby lugs. They're just still important, but they're not as important as the blue and the red. But I really pay attention to baby lugs when they're at extreme standard deviation of EWAP. And this is one of these grains. When they start getting into these extreme standard deviations, these algos kick in every single time. You need some big relative volume coming in to push this thing. Speaking of that, let's check our relative volume in here to see what's going on. You can see corn really picking up. And then there was really heavy relative volume overnight. So you can see someone was buying this like crazy, right? Obviously, because we're going up. But you got to remember, when there's relative volume is heightened, somebody's selling it too. So this means, yeah, they were buying it like crazy, but there were responsive sellers in here, meaning passive sellers in the order book that were getting their offers taken from them. Well, guess what? When you get above that area, that's when you get the rip, because now these are just like the SI indicator setups, right? It's the same principle. The guys that were selling it are now in pain and they have to puke it, right? So that's another reason you really want to watch these areas of high volume, high relative volume. All right, so that is in. I just got Whipsaw, Algo Fest, and ES. This is my life when I trade ES. I've got to never just get the rip. I've got to get tortured for 3 hours and then hopefully get the winner. So you can see they're just buying these grades like crazy right now. And you can adjust these too, right? It goes from a 1 sensitivity all the way to a 15. I have mine on 11 because I don't want to see. So you can see on my squawk channel, this is for my room as well. I have all these products. I don't have the sound on because I would lose my mind. But you can see on this tick strike over here. This is another one of my perks in my room. You get the squawk, you get the edge, and you have. So you can see all these are fire. Like you see these stocks like 3.3. Like CL is getting hit hard, but I don't want to hear unless it's 11 or higher. I would literally be instantly put in the loony bin, right? It's bad enough when they're at 11 listening to them. So anyway, but you can have them at 1 where it'll fire off and you can see it and hear it. I just have the volume turned off here, but my point was you can change the sensitivity of these to know if you want to either hear extreme or you can hear it when there's any kind of buying or selling. Right? It's a pretty cool product. There's a webinar on that as well if you go to my YouTube page. Just go to Scott Pulcini Trader YouTube. I got a bunch of like webinars that I did in my trading room, and then I did one with him. I did one with the Apex. That's the funding company that funds traders. It's pretty awesome. Again, guys, just go to my website. Just go over this one more time because I keep getting questions like emails like, how do you find this? It's all right here. Bookmap discounts, Apex discounts, Trader Sync. You guys should all be using this. We'll go over this in a little bit where you can see my awesome drawdown for the last couple of days. Tick strike. You don't get a discount on spot gallon, but it's not that expensive anyway. And then rhythmic, no discount there. So there you go. All right, still dancing around here, not filled in crude. I never took the gold trade, and this thing looks like it's about to rip. Like it keeps testing this. We just talked about the importance of this zone where that stop run happened. Like I would be really watching this today, this afternoon. If we get through here, this thing's coming up to these areas, or it should anyway. That's my opinion, but that's what the market's showing here. All right, what were the other questions, Bruce?
Yeah, let's see here.
By the way, how do you like my my new microphone? Does it sound better or the same?
It sounds pretty similar to what I recall.
I saw some of my old YouTube videos, and the comments below are like, "Get a new microphone. It sounds like you're in your bathtub." So I'm like, okay, I'll get a professional grade microphone. So I guess there's no difference. So I just wasted $70. That's all right.
No, I mean it sounds great. So yeah, I don't know what else to. It sounds similar. Maybe you had the mic on the computer before, not on the actual headphone or whatever it was you were using.
It was a external mic, but it wasn't like professional. I'm doing air quotes, but
okay. Well then, yeah, I guess maybe in your room it's different. Let's see. There's a few questions here, and I also I jotted down some notes here. I think will be helpful for people that are new here or just want to kind of recap on what Scott's doing here, because he's going through a lot of stuff, and it's. But it seems like it's very complex, but it's pretty straightforward and simple here. And I just wanted to mention this. Kind of.
Are you calling me a simpleton, Bruce? Is that what you're calling me a simpleton?
No, I actually call you brilliant because like you understand that you have to make this.
No, I'm taking something that is extremely difficult and making it simple as possible, and that's what you want to do if you want to make money.
Exactly. I mean, like
that's what I've always done.
It reminds me like I always kind of think of like reading stories of like fighter pilots that go or people that go into battle. They have a game plan beforehand, and then they get up in the battlefield and everything is chaos. It's like, okay, now what? So if you have a really simple plan, you know what to do. And basically, I mean, what Scott's doing here is like, first off, as he mentioned, he's looking at many markets. And then what is he looking for? This is really important. I feel you're looking for an event, and just to expand on what that means is the market is not based on time. It's not based on like an indicator or something. It is based on events. When an event occurs, the algos read these as well. That's why, like, you look at some of these algo-ridden markets, the big event occurs and everything changes. So Scott is looking at an event. It is stop runs and it is icebergs. So when that big event occurs, then he has a threshold for that big event, and then next he zooms out. He looks at the bigger picture. Okay, what does that mean in context here, the bigger picture? Then he wraps he looks at other confluences in that bigger picture, and then he wraps that all within a risk management strategy. Very simple. Looking at ATR, setting your stops, setting your targets, and then letting it run. And if he gets another big event, he'll scale in. So he has a scaling strategy as well. That's it. I mean, unless there's something else you want to add, Scott.
Oh, I mean, that's it. But I look at bigger picture first and foremost. You always want to know where you're at in the bigger picture, and then you start to drill down, and then you get to the volume event, right? And then so you come up with an idea of what you think should happen. It doesn't mean, and you got to be very careful doing that. And if we have time, we'll go into a little bit of this trading in the zone stuff. But one of the, I think I got something crude. On one of these, this is straight from Trading in the Zone, guys. Mark Douglas, read it. It's incredible. This is the end of the book. He talks about, he gets to this point about how the mind works, so on and so forth. But this is very important, and this is what I constantly have to monitor myself with. Right? I objectively identify my edges, right? So, meaning my edge is not real. I mean, I do read markets pretty well, but I'm not. It's, I'd say 50-50, right? The edge is the volume event, right? So where I get into trouble is when I think something should happen and I start like doing things differently. I think we talked about this last webinar. You weren't here, Bruce, but I think it was the day I got back from vacation.
Yeah.
And there was like a setup and then another setup, and I was convinced it was in ES. Show you this quickly just to give you an example of what I'm talking about. Like, this is back down over here. And I was convinced we were going to break down, right? We had this break balance, failed, it tried to fail breakout, and then more balance. Should have held, broke down. Now we're down here. I'm like, this thing's going to die. There's nothing here. So I'm convincing myself we're going to break. The volume, this was just pathetic, right? How long have I been doing this? So there was an ice setup here. This was on my PM webinar this day. If you join my room, you can actually watch this webinar. It's pretty pathetic, actually. There was a setup, and I'm like, okay, I'm already in my mind thinking we're going to go short, and we went an ATR below here, and I'm now waiting for retest failure because I think we're above the yellow lug. Then we get a nice setup right below it, buy ice. And we did this. It held that buy ice. It came back to this original zone, and I'm like, and then it came back down. I'm like, well, there's ATR retest failure. I'm not even going to wait for an ATR below this buy ice zone, which was actually a bullish setup. And I got short, and I lost. And this is that move right there. So I lost, and I missed an incredible long. It went up like 30, 40 points, all because I thought something was going to happen, and I kind of ignored my process, right? So that's where you have to be. I mean, I would say a veteran, trading veteran, and I still have to monitor myself from not doing stupid stuff. It's very, very easy to do. Meaning, you're looking at the bigger picture. Yes, you want to come up with ideas of what should happen, but do not pigeonhole yourself into only trading that way, because then, again, if you read the book, the Trading in His Own book, he goes into how you get blinded to the other side of the trade, and you're not objective because you're thinking something should happen. So you start getting like long signals, and you're just not even seeing them because you're so certain. And I know this resonates with probably most traders on here, right? So you have to be objective. So I come up with my thesis, yeah, what I think should happen, but you've got to let the real-time volume tell you if that's right. So I think crude should die here, right? And it's starting to. But if I see a bullish setup, and it turns out to be a bullish setup, meaning an ATR above some of my rules, well, something's up, right? That I don't just ignore that setup because I think we're going down, right? So that's why this is the king. The real-time volume, the SI indicator, is the king. You use the other stuff to help you. If you get everything lined up in the right way, then you get your setups in the right way, then that's an A+ trade, so on and so forth. But all right, that's a lot of chirping. All right, let me put this stop in here. ATR is down to 40, 41. That's not too bad. So I'm going to go a little outside that. So we'll go 45 ticks out of here. So that's 67, 89, 67 is where I'll stop this trade out. If this snaps back, which if I know crude, it will at least torture me for a while. But in the meantime, I told you when we looked at this, there is not a lot down here. We got through that important zone. And the blue lug is far, far away, which I like. So we are at baby lug here. I'm not going to get out of one here. One is not really confluent with anything. It is this what you have to watch for, though. We just talked about relative volume. When there's no relative volume, when the market gets to the, I mean, this has been hugging it, but when there's no relative volume, these algos will snap this puppy right back to VWAP, right? So you've got to monitor, you know, I just entered this right now, so I'm not getting out. But if I say I got in right here and I saw 2 standard deviations from VWAP, I would be probably getting out of 1 or 2 if the relative volume was pathetic.
Stop by VW, 826 contract.
All right, that's wheat. We'll go there in a second. That screens are ripping. So you can see here, we're at 2 standard deviation. How's the relative volume? Oh, well, this was about 1.5 or more. Now we got 2 times relative volume. I'm not afraid of algos. Algos are probably going to get smushed, right? So this is like
Gold stop by GC, 305 contract.
there you go. That's why I did not want to short that. Now I want to go long off of this setup. We'll come back here in a second. But this is like a self-fulfilling thing where these algos fade those extreme standard deviations, but now you have the big money coming in. So they try to fade it, then they get run over. They try to fade it, then they get run over. That's why you have to watch that, and that's why that's happening. So the algos are like participating in this down move because they're trying to fade the standard deviation, and they're getting smushed, right? That's you want to really keep an eye on relative volume.
So technical term is smushed.
Smushed, yes, that is a. Would be my P&L the last 2 days. We'll go over that too, because I always like to point out because I think it's good. You know, you guys got to remember, your trading is hard enough. 90% of traders fail or more. So I not only have to trade, I have to trade publicly, right here and in my room, and then I have to show my beatings and when I'm a moron. Like it's bad enough being a moron in private. When you got to show it publicly, it hurts even worse. So, but the reason I like to show it for you guys is to show you this is what trading is, right? We just talked about this yesterday in the room. Like I've had a couple of terrible days. Like I hit my high and I had almost limit down on, was it Tuesday? Or I think it was Tuesday. Yesterday I got beat down again. But you see, it happens. When you have an edge, you are going, your P&L will look like this. I can promise you if you go to a casino and you look at their accounting and their P&L, I will promise you a casino's P&L looks just like this. They have all the fish that come and lose money, then they have a shark that smokes them. Fish that lose money, shark that smokes them. They have a bad day. They know the math is in their favor. They know they have the edge, and they will make money overall. So that's why, yeah, do I complain and get pissed and feel terrible when I lose? Absolutely. I'm a very competitive guy. I don't like losing. I think I should win every time, right? But you have to realize trading is just a numbers game. It's a probability game. If you have the edge, you just keep putting on the trades. Like yesterday, I got killed, and then we did the PM webinar, and there was another ES set up short, and I just took the trade. I didn't say, oh my God, I'm so scared. I'm getting killed. I've had a bad 2 days. I'm not going to take this one. I can guarantee that resonates with everyone on this webinar too. When you're getting your head kicked in, it's very hard to put on that next trade. Well, that's exactly when you should put on that next trade, right? If you have an edge and you know the probabilities in your favor. Because as he talks about in trading in the zone, if you have a string of losses, you're that much closer to your next winner, right? If you have an edge. And that's what this is. That's what I'm trying to show you guys and teach you guys. If you don't have an edge, that doesn't mean, then it's just, you can flip a coin. But I know this is an edge. I've watched thousands and thousands and thousands of these setups over 3 years plus, and I know there's an edge. I know I'm going to have drawdowns. That's why you have, I'm not going to go down this rabbit hole today, Bruce, I promise, but that's why you have to have set for your max loss on a trade and your max loss in a day. And if you hit your max loss in a day, you shut it down, you're back tomorrow. Fresh, ready to go. Instead of losing 70% of your account in a day and then causing this just downward spiral mentally, financially, you're done, right? You know you have the edge. Didn't work out that day. Sometimes markets are very, very strange. I have a student in my room that I'm mentoring. She's been killing it, right? Her down days have been very little. She just texted me last night that she had a pretty big losing day. So it's like, so did I. It's going to happen, right? You just have to realize if you have an edge, it just gives you confidence to just keep putting on the trades. All right, I'm done with that rant.
That was a good. That was really, really important. I mean, there's some questions in here from.
It's an important part of trading.
Yeah,
Right?
yeah. I mean,
That's
it is trading. I mean, like, you need to have an edge. So Lucas, I think that's answering your question in depth there. And Lucas is also asking about what is, you lost me at SI indicator. It's just, that is the big event that Scott's looking for, as we discussed. Sam is asking, thanks, Sam. You can have a live mic in here too, Sam, if you have other questions. Do you ever trade the ETH, extended trading hours, Scott? I mean, you do,
Yeah,
on the
I had a
overnights,
trade on last night. Yeah,
and then you don't sleep well.
Right, exactly. That it's unless I have a strong conviction. I mean, I didn't really have that strong conviction last night, but I thought we can get to the yellow lug and ES, and that P&L is based on the close, so it wasn't that, like, that loss wasn't as big as it looks like, because they put it to the close price at the Globex close, or the regular trading hours close. It doesn't matter, but the point is, I thought last night we had a chance to get down based on what we were looking at, to get down to the yellow lug, and so I left some on. So yeah, I do trade ETH sometimes if I have a strong conviction, but I have to, especially, I'm 50 now, right? It's like I need my sleep. I get up. Is it worth getting up? And the thing is, it's like, not that I set alerts to even get up. I just don't sleep well if I have positions on, and I'll get up and I'll check it. Then when you walk in a room, I've got 42 monitors, and it's like your brain thinks that's sunlight, so then it wakes up, and I try to go back to sleep. It's most times it's not worth it as far as trading it. But if you do trade it, you can usually, a good rule of thumb is you can take 50% of the normal thresholds that are in my course. I cover like 20, and my new one's coming out one of these days, and slowly but surely. But you can take 50% of those thresholds that you use in the regular trading hour session for the volume events, and trade off of those. I have there's a couple guys in my room that are from Europe that trade all night long, and they actually do very well. The money is just as green overnight as it is during the day, right? But, is it worth me? If I just traded overnight, it'd be one thing, but I can't trade overnight. And I used to, when I first started, if you guys read Trading, Enhancing Trading Performance with Dr. Brett, that's where I got my start. 9/11 happened. They shut down the markets for a week. And then I started trading the German DAX overnight. And that's where I started to pick up some things as far as what I was seeing. And then I came back to the ES when it opened back up. And I started to employ the techniques I was seeing or using in German DAX. And there was a point there, remember, I was 30 years old at this time, or 28 or whatever, where I would literally, it was pretty brutal. I would come in at 1 a.m. Central. That's what times the European markets open, regular trading hours. I would trade till about 4 o'clock. I'd say it was 4:30. Go back home, take a nap, come back at about 8:15 Central. That was my day, and then I would scalp all day long, and I would not leave my seat. Basically, I would just sit there and scalp all day. That's too much for my age, right? That's a young man's game, but I used to do both. If you can do both, do both, but I can't do both. All right, I'm doing a lot of talking today. All right, so back to whoever asked SI indicator, or what's the SI event? See, stop iceberg indicator. That's the whole, what we've been talking about this entire webinar. That's the whole basis of my trading, right? So go to Bookmap Marketplace. It's the MBO bundle. You get the indicator. Again, it's the most powerful thing I've ever seen in my 20 years of futures trading. You need the bundle that gives you the SI indicator that reads the CME MBO data, that is the enhanced data that shows you the stops and icebergs information, and then you need a Rhythmic feed that powers it. Rhythmic is the only data provider that provides the CME MBO data. Don't ask me why. I've been asking that for 3 years now. I don't know why, but if you're using any other data service, you're not getting MBO data. And you're not seeing, you may pull up your order book, and it may look like you're seeing all these orders up and down the book. It only goes, like, I think it's 10 levels, literally. So, and the rest is like basically not real. I don't know another way to put it, but they're not the real orders. When you have the CME MBO data, everything up and down is the actual size in the order book. So I don't think a lot of people realize that either. And that's why when we look at this liquidity is important. Like resting orders. So I'm actually, now I'm looking at this, it's making me sweating my long here. And even though this soybean is working for me, hold on one second. That's my daughter. I got to bring her to school. I didn't realize I was talking this long. But this liquidity below, that usually acts as magnets. So doesn't mean we won't get down here today, but right now this was a long setup, so I'm taking it. But I do factor that in many times in my analysis. So let me just see where I'm going to possibly get out of some of these too, since that's rolling my way too.
We also
got extreme.
A specific question from Sam here. Whenever you have a moment.
Yeah. So first of all, we're extreme standard deviation of one and a half standard deviation from VWAP. What did I just say? You want to watch and make sure the volume is okay to keep pushing it, and this is okay. This is you had 2 to 1 here, and you're almost at 2 to 1 again. So there's enough here to keep this going. So we could get, there's not really a reason for me to get out of this right here. I look for ways to pay myself. But those ways are, there's certain ways are my certain things that I look for. You can see on here, this was going over my room the other day. I paid, you can see here, number 4. I was out of trading in the zone again. I've added my stuff. I pay myself as the market makes money available to me. What do I look for? Ludwig levels, market profile, composite highs and lows, and point of controls, VWAP standard deviations, important pre-devised zones. We've looked at all this today based on the candle structure, right? So we are approaching a prior market profile composite that I will get out of a couple here if it struggles, and that's right around 14, 16-ish, right? So I will get out of some there, and then I'll let the rest ride, see if we can get up to the red line. Well, this is all pretty close, so I'm not going to make, I did this to the crew the other day. I was very greedy because I thought something was going to happen. We were like right here, and I held it, and this is what I was talking about when I adapted my 2 ATR deck. It literally did like this. I think I had a $7,000 profit. It came all the way back. I ended up $1,400. That's not happening again right here, especially that I saw that liquidity. I will take my money and run a couple more points right around the 16, 18 level. I'm getting out of this trade unless it plows right through, and that's where you want to use the bubbles, right? So you can also use the tick strike too to see if the speed of the order is coming in. But if you get up to important areas and you don't see any red bubbles, all these are market orders. If you just see blue, 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 well, why do you want to sell if no one else wants to sell, right? If you start to see red at important levels, then get out. That's how I use them. Don't get caught up in using them tick for tick to trade. You'll get killed. All you're looking at is the market buying and selling. But what I'm saying is, don't get out in important areas. Like I'm eyeballing this, 15 to 18 level. If I just see huge blue bubbles, means big buying, big buying, big buying. Why? I'm not getting out. But if I see blue bubbles and then red start to come in, then I'll get out because I know it's an important level, right? I may have to get out of some here anyway because I have to bring my daughter to school, and I'm not letting this thing come all the way back on me. All right, last question, Bruce. I got to run. Sorry.
Sure. Sam's asking about what happens if the volume event occurs in the extended trading hours, but pullback happens later in regular trading hours. Do you still trade it?
That's a good question. I go through this dilemma all the time in my trading room, right? I get on at 8 o'clock Central, or usually around 8:10, and there'll be a volume event, right? So like ES here, this is a good trade, by the way, not whipsaw Algoville. So there'll be like a volume event. I'll draw the zone, and then we inch closer and closer to the open. It's taking a volume event right before the open, it's rolling the dice because the stock's open. That's new information. You got to be careful. Unless the volume event is huge, I would be very, very careful of trading it. In the regular trading hours, I would probably wait for a normal, normal hours, regular trading hours event. You could, especially the bigger it is, the more important it is. But or you can base it on. So say here's the volume event. Say this is pre-market. We come down here. What do you use? Relative volume. If you see relative volume is pathetic, 70%, yeah, fade it, right? Because those are the times you want to be, you're going to be getting this kind of trade anyway. So yeah, you can trade it in that aspect. But if you come down here, you see relative volume is increasing to 3, 4. Yeah, I probably wouldn't be playing a pre-market zone. All right, guys. Sorry, we ran out of time here. I have to get off too because your other guy starts at 9:32. But I don't feel like I've been talking. Of course, this thing's going to come all the way back on me. But I don't feel like I've been talking for an hour and a half. Anyway, still short crude. My stop there. I'm long this. I'll give this a chance to get up to this 15-18 zone, and I'll be out if this thing can't plow through here. Actually, I'm going to get out of this too right now because I got to run out of here, and I'm not going to watch this thing come all the way back on me. Got that. You keep an eye on natural gas. You are going to get a whopper move out of here one way or another, depending on how it reacts. It looks like it's going to be upside. This looks like it's finally got an ATR above here now. So ATR retest, you can go long that. I'm long the ES. And we didn't get a chance to talk about this. I would draw this zone in gold, and I would really, again, don't force the trade to the upside. Don't, because I think that's what's going to happen, but be very careful, be objective. But if you get, an ATR above that stop run, this most current stop run here, 300, which is double threshold, that's going to be a very good long too, I believe. Again, my opinion, but we talked about that zone at length. All right, guys, sorry, but you can see this, I say it every week. I do this twice a day in my trade room every day. And there's some really capable traders in there. There's actually one really, really, really bad trader. You know where you are if you're on your webinar. I'm not going to say you out here. I do it enough in my room. I usually kick bad traders out of my room that keep posting stuff that are it's nonsensical and irrelevant. And because I don't want bad traders, I want traders to learn the right way. But this guy is so bad currently. I'm trying to help him, and he will not listen. He's so bad, he's good for the room because guys can see, oh my God, I have part of this guy in me. Like, I've got to stop doing this, right? So I let him go for now. So if you guys want some comedy, because he gets a verbal lashing every day, I come on my PM webinars too, so it's pretty funny. So my point is, I do this twice a day in my room if you guys want part of that too. All right, Bruce, out of gas, got to bring my daughter to school.
Yeah, thanks, Scott, and much appreciated here. And we'll catch up with you next Thursday.
Well, thanks. Appreciate it. See you guys next week.
Okay. All right. Bye-bye.